Good day, traders. Akil Stokes here, head currency trader with www.tradeempowered.com, and welcome to my weekend review video. No camera up today. My office is a mess, and well, you guys don't want to see that, but we're still going to have some very good content. In this week's video, I want to talk a little bit about the week that was, as always. I also want to show you a trading opportunity that's on my radar. Actually, for you guys that follow me in the live room, you know we did no trading today because of the ECB QE announcement. So I'm just started peeking at the charts again and ran across a few opportunities that can be setting up for tomorrow. I actually ran across an at market one that I just shot over to the trade floor. So I'll share with you probably one of those. I also want to take a look at a live recorded session from today's live room where we broke down a certain pair and really talked about a trading opportunity versus a good trading opportunity and the difference between that. So a lot on the agenda for today. But first, welcome as always. If you are brand new, I appreciate you finding me. Do me a favor. If you get to the end of this video and if you like the content, if you find it valuable, do me a favor. Subscribe to my channel. That way you can get updated every single time I put out a video. Also, like and share this video. No use in holding this useful information just for yourself. Share it with the world. Do your part. And of course, if you are one of the almost 5,000 members that are subscribed already and you're joining me each and every week, I just want to say thank you once again. You guys leave lovely comments each week, and it really motivates me to do this. Let's start off with a trade that's on my radar. We're going to start with a lot of the yen pairs are on my radar today. Let's start with the pound yen. Actually, first, I'm going to let you know how my week was. For you guys that are consistent followers of my video here at YouTube or on my personal blog where I do a blog post almost every day. You know that last week was a very, very big week for myself. It was also a very, very big week in the syndicate. And I was going into this week with the mindset that, hey, we've got a bank holiday on Monday. We've got ECB, Draghi speaking on Thursday. Probably going to be more of a low key type of week where Tuesday is going to be the new Monday, which is typically slow. Wednesday, people aren't going to be doing too much in anticipation of Thursday. Well, I was dead wrong on that. It was a pretty active week. We had big Kiwi news come out, which moved the market. We had a surprised interest rate cut from Canada, which moved the market. And we also had some leakage of what the QE was going to be like. I believe it was on Wednesday, which moved the market as well. So it ended up being a pretty active week. I fired off about 7 trades myself, 3 winners, 4 losers, and am currently sitting minus 18. So 18 in the black. But I do have one, or 18 in the red, 18 in the red. But I do have one trade on the board right now on the dollar yen. That's about 4 pips in profit. Woo! So speaking of the yen pairs, let's go to the pound yen. And a lot of the euro pairs, obviously, we're still dealing with the aftermath of today's conference. But the pound yen is an interesting pair because we're still really in no man's land. Euro yen, we saw the same drop with euro yen. But we did come down to a structure level on that pair. On the pound yen, you can see we're kind of floating in no man's land. We didn't quite get down to our previous support level. We're kind of just consolidating at a level that we consolidated before. And well, if we know one thing about consolidation, it is consolidation yields patterns. And we always talk about the process of IPDE, identify, predict, decide, execute, meaning before you ever enter a trade, you want to have an idea of is the market bullish? Is the market bearish? Do I want to be on the bull side? Do I want to be on the bear side? And have that determined before you look for your trading opportunity. Because as you'll see in the video later, you can make a trading opportunity out of essentially anything. In this particular scenario on the 4-hour chart, we actually have 2 scenarios, or we have 2 potential trading opportunities. So you can see the markets in consolidation where basically we're drifting downwards, but we're essentially going sideways right now. And there's an opportunity pattern wise for both. If we look all the way at our swing low right here, and we take our Fibonacci retracement tool going from swing low to swing high, you're going to see that you're going to see that I'm missing a certain Fibonacci marker. You're going to see that we come down and we pass a 618. Now, whenever price action makes a retracement that is past a 618, that's going to put me on Gartley pattern alert. Next, I need to see if my C leg hits a 618 as well. Indeed, we do. So we have all the qualifiers for a potential Gartley pattern that's going to look something like this. Let me just get my triangle tool here. Looking at an X to A, an A to B, a B to C, and potential CD completion, which is going to be right down here. It's technically going to be at our 127, but let's see if that lines up the right way here. Boom. Bow, a little bit lower, right down at our 127. So if the market decides to push down, I'll take these fibs off. If the market decides to push down, we have a bullish Gartley pattern completion right down here at 176.13. And well, what if the market decides not to push down? Well, if we take that same Fibonacci extension, I'm not going to draw out the whole thing for you. If you know how to trade Gartleys, then you can see this. We're going to have another potential Gartley to the high side as well, looking at an X to A to B, B to C, and a CD completion. Let me go ahead and change that color just to separate it. Yep. I want to draw another one. There we go. So two potential Gartleys here on pound yen. And what we're doing is this, we're just bracketing the market. So what you're going to want to do if you're an advanced pattern trader is you're going to want to have some buy orders down here. You're going to want to have some sell stops down here. You're also going to want to have some sell limits up here and some buy stops up here. And now it doesn't matter which way this market decides to go. If we go up, we've got our selling opportunity right here. If we go down, we have our buying opportunity down there. All we have to do is wait and see which one occurs and then just make sure to remove the orders that are non-existent. And we could make this, depending on how it fills, this can end up being even more advanced. Let's say the bearish Gartley here in blue fills. You can actually trade that down as the aggressive C of the red one. But the point is we have an opportunity on either side of the market. So this is something that you definitely want to look at and keep an eye on over the London session tonight to see if we get a bounce up here. And guess what? Well, if the market continues to consolidate, that's good. That means we'll go sideways, fill, get targets, and we may have another opportunity as the market comes up. Again, consolidation breeds opportunities for pattern trading. There's another one as well I just entered. I don't want to make this too long, but dollar yen is showing a Gartley pattern as well. I can actually just bring over this chart right here. Dollar yen is showing a Gartley pattern as well, completing at 118.65. You can see we've rolled over about a little more than 15 pips right now, but same principles on that one. So that's a trade to keep an eye on for tomorrow. Now, what I want to do next is just show you a brief clip from today's live room session. It was a breakdown on dollar Canada. A trader was looking at a particular trade, and basically I said, hey, convince me to trade this. And it's a good trick to ever do that. Typically, if the traders I work with can convince me to trade it, they can convince themselves to trade it. And what I want to make sure this trader was doing was not just looking at an opportunity and getting emotional, like, oh man, it's up there, I got to sell, but making sure it fit the rules and the regulations of what we require to trade certain setups. So take a quick look at this recorded content. It's edited because, you know, for time's sake. But take a look at it and I'll be right back afterwards. Potential double top, dollar CAD. Yep. We actually have an official double top. All right, Nate, convince me to trade this. Convince me to trade this. All right, market didn't close above structure on the daily. Let's head over to the daily chart. Let's see if you can make me a believer. Let's see how good you are. Let's go. Anyone can help. Doesn't have to be just Nathan. Anyone can convince me. Let's go USDCAD. Going down to trading or going over to trading view because I do want to see the weekly time frame too. All right. So daily, I got nothing on the daily that's going to convince me to sell. I've got a big bullish trend on the daily. We are overbought on the daily. We can add that. Most important to me is what? Structure, right? I need resistance. So if you can't show me any resistance, I don't want to trade it. If you can't show me any resistance at this level, I don't want to trade it. So let's move my red line up here. I may have to go to a monthly. Let's scroll back. Let's see if you can show me some resistance. Nope. You guys haven't shown me anything. Nothing. There's no resistance here. We're right in the middle of a level right here. We're right in the middle of a level. We're not at any resistance levels. There's no resistance on the daily. Where's the daily resistance? Where's the daily resistance? We got a big bullish candle on the daily. There's no resistance up here. You guys got to do better than that. You got to come harder than that. I'm also seeing this. What if I told you this was a flag pattern? Would that make you a little nervous if I told you this was a flag pattern? And that we know flag patterns typically break out to the upside, especially when there's no resistance there? Would that make you a little nervous? No? Maybe? Remember, guys, and this is a good teaching moment, there's always a reason at any given point in the market, there's a reason to buy or sell the market. I can convince you of either one. Right? Guys, bullish flag pattern, heavily bullish trend. We've got resistance a little higher. We know there's a breakout in this direction, right? For the bulls. Guys, for the bears, triple top highs, RSI divergence. Market was oversold. Sell. This is why we have rules. Because if we don't have rules, we'll do whatever we want. If it's the same thing as I told you about the news earlier, right? If I want to sell Canada, I just created a reason in my mind to sell Canada. If I want to buy Canada, flag pattern, I just created a reason to buy Canada. Do you see how that works? We'll create, our minds they work weird. We'll create whatever we want to create. It's kind of like being in an argument and you find every single fact to support your side of the argument and you just conveniently ignore all the facts against your argument. I do that a lot. It's the same way for trading. Bang, there we go. Someone nailed what I'm looking for. Now, I'm not saying this is a bad short opportunity. I'm saying there's not enough here to convince me to go short. But you guys said this, right? You guys are looking for a move down in the previous structure. This level right here, 2114s or even lower than that, or 2050s. 2114s? Oh, you're currently, I don't care. No offense. 34 pips in profit means nothing. Because guess what? You're not really in profit until your limit orders are hit. So you could be 34 pips in the negative. That doesn't mean anything either. Nothing matters in this market until your stops are hit or until your targets are hit. Don't get excited over being up 35 pips. Don't get discouraged over being down 35 pips. Why? It just doesn't matter. Let's just be real. It doesn't matter, right? Because is that money yours? It's not. It's not yours until your limit order is hit and it's in your account. And you've double checked to make sure everything is closed out the right way. Now, I forgot who wrote this earlier, but here's what I would do in this situation. Now, the risk reward is great. So if you're taking an aggressive short on here, if you're gonna see this thing out, to your profit level, if you're not gonna get cute and take profits early, this is a great risk reward. For you guys that are a little more conservative, how many of you guys are more on the conservative side? How many of you guys are seeing trades like this and you're like, well, maybe, but I'd like to see a little bit more because it is going, it's like jumping in front of a speeding train. Well, you use the alternate technique, which is the 2618. All right, gang, back, and you can see my dollar yen trade is working its way down pretty well, up about 22 pips in a short amount of time. Hopefully we can see this thing roll over maybe by the end of me recording this video, and we can take a look at some profit. But let's get this off the board. We don't want to look at the numbers. At least I don't like looking at it. That's one of the easiest ways to make an emotional mistake like early profit taking, right? Some of you guys have been there before. But what I wanted to show that video to you because, well, I got an email this week inviting me to join a trading competition. And you guys know I have a big sports background. I'm super competitive. And at first glance, I'm like, oh, yeah, a chance to trade against others in some type of competitive atmosphere. I mean, you can challenge me to essentially anything, and I will usually accept it. If I have a chance to beat someone in something, I'm going to do it. That's just it's just the way I operate. So at first I was all gun ho for it. And then I thought about it, and, there's a big difference between trading in a trading challenge, in a trading competition, and trading in real life. Meaning, if I were to trade in a competition, I wouldn't use the strategy that I use now to currently trade. I would have to use a very, very aggressive strategy because my goal is to make the most money in a very short amount of time. And that's the complete opposite of what you want to do in real life trading. And a lot of traders come into trading, professional trading, thinking that, I want to double my account. I got to make this much money in this many days. And a lot of those traders end up blowing accounts. The key is to not really shoot for the moon with your trades, but have a consistent return month in, month out, year in, year out. And what caused me not to want to do this trading competition, because let's just say I won. I'm not saying I would have, but let's just say I hit a hot streak during the competition. I used a very aggressive money management strategy, and I win the competition, and people know me for that. That's not necessarily a good thing, because then when they watch my YouTube videos, when they follow me on TradingView, when they sign up for my training courses, well, they're going to expect those same results, and they're going to be under the impression that it's realistic to do that on a consistent basis. And I think that's one of the problems a lot of young traders run into. We see so much out there on the internet about doubling your account in 60 days and making 1 million pips in a year. And at that point in our trading career, where we're kind of just wide-eyed and fresh, we have no idea what's what. We don't know what's realistic and what's not. So we hear all these things, and we really start to believe that this is what trading is about. It's realistic to double your account every month. It's realistic to bring in 1,000 pips a week. And then when we fail, when we fall short of doing so, we think we're failures. We quit on our strategies. It's not for us. Whereas the better way to trade is, again, my goal is if I can make 3% a month, guys, I'm happy. That's it. Laugh at me if you want. I know a few of you are, but you do the math. You do 3% a month over 12 months. And, you're looking at 36, 40% a year. And I don't know who wouldn't take that. If that's too small for you, then, well, I'll leave that alone. But the point is, the way to do that is, when you're trading with your hard-earned money, guys, you don't want to be in a rush to throw it away. You don't want to take every opportunity aggressively, because every opportunity isn't the best opportunity. You want to have filters in your strategy, in your system, that allow you to determine whether this is a good opportunity or just a trading opportunity. And that can be, different things. That can be something like the combined technical score, the CTS score we teach, where you go down a checklist, and each thing on your checklist has a number figure, and you add up the points. And, if you're above this level of points, yes, you can take the trade. If you're below that level, no, you can't. It could be something as simple as putting in a filter that says, hey, I will only take trading opportunities that are in line with the underlying trend. The point is, the number one rule of trading, guys, is protect your capital. It's not about getting rich quick. It's about conserving capital and not blowing that account. And again, a combination of today's conversation and that invite to the trading competition just got my mind stirring, and I feel like I had to say something. So I hope you guys enjoyed this week's weekend review. A little long, but I think that's okay. If you're interested in knowing how you can follow me a little more, there's a few ways. If you're into day trading or intraday trading, head over to our website at www.tradeempowered.com. Go in and click the trader resource button. Scroll down to live trading rooms and go, it's a free 1 week trial. Spend a week with me in a live room. See if it's something that you like, you enjoy, if this style of trading is your cup of tea. And we have a great group of members in there, and it's really, really, really fun and really educational. If you're someone that doesn't have the hours to be in the live trading room, if you're not available between 8 a.m. and 11 a.m. Eastern time, you can always check out our syndicate program. This is where Jason and I share our daily ideas for the market. Jason does War Room every morning, which is about a 15 to 20 minute video breaking down his best trading ideas for the day. I shoot a few ideas a day into our software called the Trade Floor, and also do a few videos each week, kind of prepping you for the London session and what to keep an eye on overnight and for the next trading morning. So that's it, guys. Appreciate you guys joining me once again. Until next time, plan your trade your plan. Best of luck in the markets.